So thank you everybody for making the time today to join Employment Heroes webinar. Super excited to be bringing you a session around capital stack, grants, SR&ED, and really the financial strategy that can help fuel your startup's growth. For those that joined our previous session a couple weeks back, we really dug into the SR&ED program. And I know there's been a ton of questions around what grants work with that. How do you know when you're ready? So this session should really encompass a lot of those key points. And so I just want to kick it off with a quick introduction, and then we'll go through the agenda for today. So I will begin. So my name's Sarah Lesperance. I actually head our SR&ED strategy and growth here at Employment Hero, previously known as HUMI. My role is really connecting founders with the resources that they need, supporting them with SR&ED, helping them identify whether they are ready to file yet, and next steps. I'll pass it over to my colleague, Ali, to do a quick introduction, then we'll make our way through.
Thanks, Sarah. So Ali Afshar here. I am the head of client success and claim solutions here at Employment Hero, previously known as HUMI. My background is in engineering, so the reason for that is we help identify and assess the eligibility of projects before we submit them, and also identify the eligible expenditures that go hand in hand with them. I've been doing that for close to 10 years now, and previously to that, I was operating and working as an engineer myself. I'll hand it over to Chelsea and Mandeep to do some quick intros.
Thanks, Ali. Hi, everyone. My name's Chelsea. I'm the founder and CEO of Grant Solutions Canada. I've been a grants consultant for over 15 years, securing over $30 million in projects for both for-profit and not-for-profit projects across Canada. And since we've opened our firm, we're working on pipelines at approximately $200 million for this year, and we're really excited to be here today. I'll pass it over to Mandeep.
Thanks, Chelsea. Hi, I'm Mandeep. I'm a co-founder and partner at a firm called BrightIron. We provide bookkeeping, fractional CFO, HR, and go-to-market services for tech startups. We've been around for about 12 years now. I've worked with a few hundred startups throughout Canada. And over our last 12 years, we've seen the importance of grants and SR&ED to a company's overall funding strategy. So I'm looking forward to just providing how to make it a little bit easier in the reporting perspective at the end of everything.
Awesome. Thanks, Mandeep, and appreciate Chelsea and Mandeep joining today. Both have a ton of knowledge as well as Ali. So hopefully any questions that you have that are joining us today, drop them in the Q&A feature if you can throughout the session. And at the very end, we'll kind of address those questions and get into it the best we can. So Natalie from our events team, if you wouldn't mind just flipping us to the next slide. Thank you. So for today's format, so you can get an idea of what we're going to cover, we'll start off with a quick introduction to SR&ED, talking about the basics, eligible expenses, preparing for funding, and then how you can bundle SR&ED with a couple other grants. And then playing into the grant conversation, we'll have Chelsea speak on, a grants overview, what the process looks like, what's involved, and really how to assess when you should be ready to move forward on those grants. And then lastly, we'll move into Mandeep's session, preparing for funding. So we'll chat about some eligible expenses, really how to understand if you're financially ready to move forward with these programs, and grant stacking, because I know that that is a very popular one. And then we will finish up with some Q&A. So we'll move over to the next. And to kind of get things moving, we figured it would be fun to start a poll. So you'll see one pop up on your Zoom screen shortly. Natalie's going to pull that up for us. And I know that probably a lot of these questions, there might be multiple that are applicable. Just pick the first one that comes to mind. So the first question is, what's your biggest challenge when it comes to accessing non-dilutive funding like SR&ED or grants? So go ahead on your Zoom poll. I think everybody should have received it on their screen, and feel free to submit your answers. We'll just give it, 15, 20 seconds here to get everybody's answers in, and then we'll kind of chat through that. All right. The first poll, it looks like we have a pretty solid lead, but the second one is a tie. So we'll kind of chat through those once we close the poll in a couple seconds. It looks like they've stopped moving, so I'm just going to end that. And in terms of the results, so it looks like when we asked what the biggest challenge is when it comes to non-dilutive, most of you seem to be around the idea of understanding what programs that you're eligible for. So this is a really good basis. We will cover some of this. And after the session, feel free to ask questions. We're always happy, each of us, to book meetings with you to really go in individually and understand what you're currently doing and how to help you know what would work for you. And then the second question we asked around what's your main goal in pursuing non-dilutive funding? So it looks like 30%, not sure, still kind of exploring options, followed by extending runway without giving up equity. So very solid. We will definitely dive into all of these and appreciate you sharing that with us. So Natalie, if we could just flip over to the next slide. Perfect. So SR&ED. So for those that don't know, Employment Hero actually does offer SR&ED services. We have a number of tools and products that can support with your SR&ED claims. We're most known in the market for our employment operating system, payroll, HR, time tracking. So if you are curious how this all works together, feel free to reach out after this. But for today, I'm really just going to go over the high levels of the SR&ED program. Those that don't know, SR&ED is the Scientific Research and Development Tax Credit Incentive by the CRA, Canadian government. Most startups, when they think about funding and how to scale to that next level in their business, naturally think dilutive funding, like going through a VC, trying to raise a round. We hear that so much in the media that that is kind of the first step. But I know myself and the rest of the team that's presenting on the webinar today really want to get across that there are other options out there without giving up the equity so that down the road, when you have scaled your business, you still have that big share of ownership. And so the program itself is Canada's largest incentive innovation focused program, and you can actually claim up to 64% of eligible R&D spend in salaries back. So it's a huge bucket that you could recover. And typically the program itself takes about 3 to 6 months after filing to be assessed. I'll dive into this a little deeper on the next slide, but just very high level, want to share as well that this is a really good option if you're looking for different options to kind of bridge cash between funding rounds as well. So I'll move over to the next slide. So where the money comes from, when you're thinking about SR&ED, you've probably heard the biggest caveat, which is being around salaries. That's kind of the thing that people know SR&ED for, is that those lucrative technical development salaries can be returned and can claim up to the 64% back. But there actually are a number of other eligible expenses under the program that, you should consider, especially as you continue growing your business, as these might be able to support you in getting that cash refund. One, salaries, which I touched on. This is the largest return. They do have to be full-time employees, Canadian-based. When we say salaries, it needs to be at least a monthly regular payment being made to that employee. And depending on the amount of time that's going in, and we can prove the research and development work, we can claim up to 64%. For subcontractors, they can also be eligible as long as they are based in Canada doing the work in Canada. So if you are building something technical, or your company is, and you have a developer that's on contract that's doing some of this work, this may be something that we can apply on your behalf for. One thing to note is you always want to look at the contracts that you have with your subcontractor, make sure that you are eligible to apply for that you own the work that they're doing. And then the third category is materials consumed. So this you should think of as a testing and prototyping material cost. If you're building something and let's say you're testing it, it keeps setting on fire and you have to keep rebuilding it, you're not selling it to a consumer, those material costs could be eligible to go through on your shred claim. So depending on the work you're doing, this could actually be a very large bucket for some companies. And then lastly, for those that don't know, there was some new legislation coming into play that was announced earlier this week or last that will now allow capital expenditures. So facilities that are being used for R&D work specifically. This one is newer, so if you have questions about it, feel free to ping us afterwards. We're happy to chat and see what would work for you. And then when it comes to refund rates, so another misconception is that you have to be a Canadian controlled private corporation in order to apply for SR&ED. That would be 90% of the case. Yes, that would give you the biggest refund. However, even non-CCPCs can apply for SR&ED. They're just going to see a lower tax credit rebate. And then lastly, the timing around SR&ED. So it is an annual program. As long as you're continuing to build innovation and research, you can apply every single year as long as we can prove that work is being done. The caveat being that you actually need to have your corporate taxes filed before we can file your SR&ED claim. We can begin working on the claim, but we just can't submit it to the CRA until that's done. So even if you are a pre-revenue company, SR&ED can still help you generate, a refundable cash option and not just tax offsets. And perfect. So I'm actually going to bring up our technical expert, Ali, who introduced himself at the beginning. Ali and his team actually manage all of the claims that we do at Employment Hero. They have fantastic relationship with the CRA and really have that technical background. So he'll walk you through some of the common projects that are put through under SR&ED, some documentation, and yeah, I'll hand it over to you.
Thanks, Sarah. So yeah, throughout my experience of doing SR&ED claims, I've seen claims in many different fields of sciences, but the examples that we're providing is the ones that are probably going to be most relevant to companies that are involved in these software engineering space, doing some sort of software engineering project. The thing to keep in mind is when it comes to SR&ED claims, what we are most interested to learn about is the field of science that you're doing work in and the available tools and technologies within that field of science. The thing that we're maybe less interested about is the novelty of the product itself and the usability and success of that product and how successful it was in the market. So the SR&ED claim cares more about what you're doing in what field of science and how difficult it was to achieve it. So some examples could be activities that are done within the software development space, as I just mentioned. But that goes hand in hand with AI, machine learning model development. It could be activity that is related to some sort of process improvement or creating new processes in the first place. Prototyping activities that come hand in hand. It can go further to that, right? So you can also be involved in some sort of a mix of hardware and software project wherein you leverage the software to improve an existing hardware that you have or to reshape that hardware piece that you have, which requires some sort of material investment at the same time. That kind of feeds into more of an electronics engineering kind of field of science. For SR&ED, most things that would be eligible, or probably the ones that are easier to get through, are stuff that you do internally to improve products or tools that you're using on a day-to-day basis for your own purposes, and it's not documented publicly. But you can also have success with tools and technologies that you're creating in order to improve a product that you're trying to release into the market, or improve a product that you've already released into the market. So some examples that you guys can see, and then we can go to the next slide, if possible. Okay. In order to have success, the most important thing after you submit your claim is to be able to back it up. And the way to do that is by keeping contemporaneous documentation. What we want to avoid is creating these documentation after your fiscal year, your tax fiscal year has ended. So the most important things that need to be kept track of are listed here. Obviously, when it comes to SR&ED, the most important thing is the way that the SR&ED project starts is by identifying a technological challenge, or what we label it as uncertainty. That is not something that you can resolve through means of existing available knowledge and tools that are available in the public domain. Once you identify that technological challenge, you need to make sure that it's documented and you're able to prove that it was contemporaneously done. So some available methods that you can do it is like Google Docs, Confluence, Notion, whatever sort of project management tool that you guys are using. So make sure that that uncertainty is kept track of. Once you have identified that uncertainty or challenge, the next steps that follow through naturally are experiments, iterations that you guys do in order to solve that challenge. Usually it's an iterative process, so we want to make sure that you keep track of each iteration of the work. Naturally, when you think about it, Git commits do that because you're keeping track of each version of the code that you're creating. But on top of that, you have other platforms that naturally keep track of the state of the project, like Jira. It doesn't end there. You can use any other form of tracking of the project internally to use it as evidence, right? So if you send an email, if you have Slack messages, or any other form of communication that you mention this project and the state of it, and it's contemporaneous, it can also work as backup and evidence that you can provide in case of a review. Who worked on it is pretty important, right? So as Sarah mentioned earlier, we need to be able to identify the eligible expenditures. And to do that, we need to understand who worked on that project and how much of their time. So if it's a contractor or if it's an internal employee, how much of their time was spent on which specific part of the project and which challenge with iteration is extremely important, and also keeping track of the tasks that are eligible. So that goes, in line with the calculation of the costs and resources. Once we have that and how much was spent for the salary or for the contract expenditure, we would be able to calculate the total spent on that specific SR&ED project. So in terms of supporting evidence, just make sure that you keep track of it and you store it somewhere that is easily accessible. You have a system of record that you're using already, and you're able to provide it as contemporaneous documentation in case of review in order to make sure that your claim is successful. We can move on to the next slide.
Awesome. Thank you. And for those that are maybe still thinking around how to manage their time tracking, obviously every organization is doing something different behind the scenes. So we're happy to work with you on the tools that you're currently using, but we can also help make recommendations as well, as Employment Hero does offer time tracking, so we can support with some of that and the payroll behind it, just to make your claims a bit more smooth. So now moving over to the piece that I think most people are joining here from today, which is the grant side. So when it comes to SR&ED, it really just is the tip of the iceberg with your non-dilutive. Really, it's something that you've already done the work and you can claim back the amount that's gone into it. What we do see, though, for a ton of our clients that we work with is that they're taking advantage of different government grants to really maximize that non-dilutive runway. So some common grants that we typically see stacked are the CAN Export Grant. So, if you're using SR&ED for the product size of the R&D phase, and then CAN Export for your go-to-market abroad, that's a really good pair. IRAP is another huge one. I think I even saw it mentioned in the chat that there's some questions about it already. So, you can claim SR&ED on portions that aren't under IRAP already. And then the Canada Digital Adoption Program. That's another really great program. And so we're really fortunate today that we have our partner Chelsea with us on the webinar, because we're going to pop over to her section now, where I know she's going to run through a ton of this and get more in detail to some of these grants as well. So Chelsea, very quickly before we move over, Nat, if you don't mind going back, forgot that was there. If anybody wants to book a meeting on SR&ED, we'll just leave this up for 5 seconds here. Take a screenshot of it if you like. I'll also send out all of our contact information. You can reach out to myself or Ali, and we're happy to connect with you on your SR&ED claims. So I'll leave that for a couple seconds and then pass it over to Chelsea. Thanks.
Thanks, Sarah, and thanks everyone for joining today. So grants, I apologize for the quality of my voice. I'm still kind of recovering from an illness. But what I do want to explain in terms of grants is that we're going to do a general overview of some pretty structural concepts around non-dilutive funding. We're not going to go into deep specifics because that could take hours. I could spend hours on every single grant program we're talking about. So we're going to keep it very high level for today, as well as for the time commitment we have. So what is a grant? And in its crudest, simplest form, we have to think of grants as funding solutions to problems. As we think about it in terms of that this is government money, typically government money, that is going to be funding what they deem based on their program guidelines and applicant guidelines to be something that needs to be fixed or solved or researched or developed within Canada as a part of their budget, which was just announced, which is great. So we know kind of where the government is also putting priorities into different pockets of money. So that's what a grant is as its rudimentary, is that it needs to solve a problem and with a solution being funding. And as industry leaders, you are the experts on what those problems are, and we need to ask the government for help. So let's move to the next slide there, Natalie, please. So from a grant overview perspective, where does this funding come from? There's 3 levels of government that it can come from, which are federal, provincial, and municipal. However, additionally, on top of that, there is non-dilutive funding, sometimes available for for-profits, mostly for not-for-profits, that can come in the form of foundations. And then you can stack these with sponsorships, private loans, and angel investments, which I'm sure some of you in seed and pre-seed rounds have already been having additional conversations about. When you see the word sponsorships, and I have in brackets no fee beside it, it's very specific because right now in the grant world, we've been seeing some companies that give out sponsorships, but they say that they're grants. And there's a fee attached to them, and it's an application fee. If there is an application fee attached to a grant opportunity, it is not a grant. It is you buying a lottery ticket. And we never recommend applying to those types of grants. Because typically what is involved in those is having a different caveat where you have to meet certain eligibility criteria that also align with the company as opposed to with your funding solution and research project. A lot of these grants, when you read their applications, will have the word stackable in there, and this is the word to look for, and that's what we're talking about today, is what grants can be stackable with other grants and what can be stackable with different types of tax credits and specifically SR&ED. So that's a word to look out for. And if you don't see it in a grant application, it doesn't mean that it's not stackable. It just means that there's the possibility that something could overlap with another funder and that you need to ask the program coordinator for additional clarification. We can go to the next slide, please. So what is the grant process? From a high-level overview, this is a general structure of what a grant process could look like. Some grant processes are different. They will be outlined for when that comes. So for example, AI Compute Access Fund has a different process than IRAP, than SR&ED, than SIF and ISED. So basically, the grant process, before we even start looking at those specific types of grants, we're looking at the research. And we're just looking to see if we're even eligible for grants. And I have a resource for you later in the presentation of how you can find those to see what we're eligible for. Once we've identified some key opportunities that align with our project, they may align and they may not completely align. So maybe we fit 4 of the 5 criteria, for example. That's where we come into what we call a grant readiness assessment, where we're trying to understand if you're fitting all the criteria that the grant is asking for in the application guidelines. When we ask the question, what is your challenge in terms of getting non-dilutive funding? A lot of people said about that eligibility. That was the number one answer, where that readiness assessment is the very key. So when we look at those readiness assessments, what we're doing is a gap analysis. As the budget has been announced, there is more funding going into certain places than other categories. And what that's going to do is it's going to shrink the eligibility of certain companies doing certain things. So positioning is really, really key. You have to be able to fit every single eligibility piece, and your project has to fit every single desired outcome that they are looking for in the grant. So once we find that perfect fit, then we go into drafting, compiling, and creating the application. We'll go into more detail of what that looks like in the next slide. But once we have drafted, completed our application, we go into the submission process. And then when the grant is won, typically a lot of these grants just don't give out 100% of their money. It has to go through something called the reporting process. So that will be receiving a letter saying, congratulations, you've received a grant. Here are the guidelines that we need you to now complete from a reporting process that they outline. And you need to do it by these dates to receive increment insertions of your money by these dates. So it's essentially your contract with the government. It is a legally binding contract. And that's a good thing, because it means that if one end is not upheld, you can take that for legal advice. Next slide, please. So what's involved in that grant, that drafting process that I spoke about earlier, the drafting, compiling, and creating? It's going to involve essentially 3-ish sections that I've generalized here. A written section where they're going to ask you questions around, what are you going to do with this money if you get awarded? What's the needs assessment? What's the impact statement that's going to happen? They just want to know how their money is going to be used, and then they're going to compare it to how they want their money to be used. Then you have the financial section. The financial section is going to have your budget, and it's also going to show where their money is going to be used, as well as stacked with other money that you are receiving for the project. Typically, funders do not want to be the only source funding a project. They don't want to be 100% of the investment. So it is something that they expect to follow in their budgets. They will usually have a budget template that they want you to fill out. Some of these budgets will ask you for what other funding is included, and some of them won't, and they just want to see how only their money is being used. What that means, though, is that your financial narrative needs to make very clear sense. And in comparison to your written narrative, they need to be synonymous and synthesize really well. Then you have your support material section. This can come in different ways, but just like with our SR&ED presentation, they want to see potentially photos or financial statements or letters of support for what you're doing, what you've done so far, and what you plan on doing. Maybe that's diagrams, very conceptual support material. They will list out what type of support material they are looking for. An additional tip that I have seen is that anytime you make any of these types of claims, as long as you're comfortable with it, what they will be doing is every time you make a claim that you've done something or are doing something currently, they want to see evidence of that. So every time you make a claim of, we have done XYZ already for this project, you have to have that backed up in your support material in some form. So essentially, they all need to connect and tell the same story. Can we go to the next slide, please? So how do we know we're ready? So what this looks like is we don't know if we're ready. We don't know until we know that gap. So before you begin looking for grants, I've compiled a list of 4 of the main funding sources. You see that there's 5 there, but SIF and ISED are connected. So this is why I say that there's 4. What you can do is you can read through and determine if your company, number one, qualifies, because even if your project qualifies, your company has to qualify first. So this is not an exhaustive list of what you could be eligible for, but in complementary with SR&ED is IRAP, CDAP, CAN Export, SIF, and ISED connected together. IRAP typically, excuse me, looks at developing and commercializing innovative technology-driven or improved product services and processes in Canada. And CDAP works within the digital adoption. So if you are adopting new technology, there are options there. CAN Export, as we mentioned before, is for-profit businesses incorporated that are able to show that they need to go to market and specifically market outside of Canada in order to boost Canadian economy. And then SIF is the larger federal program via ISED. It's sometimes it's a little bit tricky with SIF, but I do recommend looking it up. They do have multiple streams. So they have, streams 1 through 3 and streams 4 through 5. I recommend just going through and reading to see which stream you are a part of or what can identify the most with you. And then also they're looking at things like different technical readiness levels, a part of those streams. So they're a bit hard to define in a project like this. But if you want more details about any of those things, feel free to reach out to me specifically or give feedback to Employment Hero about having a more in-depth topic on one of these streams. If we can go to the next slide, please. So to continue, how do we know if we're ready? I have taken the liberty of going through these programs and making a general summary. This is not a summary for every single requirement of every single grant because multiple of these bodies have different streams of funding that they require. But in general, from a minimum requirement perspective, the business has to have fewer than 500 employees, audited financial statements. However, some of these programs don't require audited financial statements, but I highly recommend doing them because as you go through year over year and apply for more and more grants, more and more will require audited financial statements. The company has to be owned by a Canadian citizen or a permanent resident. You have to have a proven body of work. This part can get tricky because what is defined as a proven body of work when maybe we're working on something that's still very conceptual? This is where it's really important to either talk to a grants consultant about what the definition of a proven body can be in comparison to the grant you're applying to, because that will be a part of your support material. Revenue can be at approximately 100,000 and up, and 500,000 and up for certain streams. Technical readiness level, or TRL, is typically used for SIF and ISED, but I have seen where they have specific TRL levels that are required for certain funding streams, and that it has to be fitting one of those. So this is kind of where you can kind of start, where if you're ready, how do we know if we're ready? If you're fitting at least like 3 to 4 of these, I would say you could start researching more around what funding opportunities you might be able to apply for with some further research. We can go to the next slide, please. So where do I start looking? Like I mentioned, what I showed earlier is not an exhaustive list. It's not the be-all end-all of all the grants that are out there. There are employment grants. There's environmental tax credits. There's SR&ED tax credits. There's, excuse me, there are grants around so many different aspects of the company, and that is where my first recommendation is if you don't know where to start, the government has a great free website called the Business Benefits Finder. You can go look it up on Google. And it's great because what you can do is you can just fill out everything in a step-by-step process. And what it will do is it'll show you all the tax credits, all the grants, all the possible partnership opportunities with the government that you're eligible for. And it's just a great way to kind of get started to get an idea of what you could and couldn't be eligible for. There are paid versions of these types of systems, which Grant Solutions Canada, we do pay to have those inside opportunities. But typically, those are more so if you need to have access to specific sponsorships or foundations. But I highly recommend the Business Benefits Finder as a great place to start. Next slide, please. Okay, there we go. When should I ask for help? I, in its simplest form, I say the sooner the better. In the worst case scenario, if you ask for help, you're going to get help in some form. And that help could even be, hey, you're not ready right now, but here's the gap, and you can be ready in 6 months from now, for example. So beginning that research process early ensures that less opportunities are missed for funding. Some of this funding does have deadlines, and where it comes from is that it's a pool of funding that then has a deadline for the application processes in phases, and then that program gets completely stopped. So the earlier, the better, because grants can take a lot of time. So when you should ask for help should be when you can also afford it in both capacity and financially. Reason I put these two separate is because sometimes the clients that I'm meeting with are the ones working on it evenings and weekends outside of their work hours. So having the capacity to do it is really important too, because these can take hours and hours and hours of your time. They can take hours of your staff time. So it's important to understand that if you're going to pursue that, you have the mental capacity, the work capacity, and the financial capacity to do so. And if you don't, that's fine as well. It's just being aware of what that time capacity will be on taking a toll on your staff. And then some additional tips that if you are going to consider a grants consultant, consider that person as a part of your financial strategy as opposed to your sales department. Grants consultants don't sell your product to the government for funding in exchange, or they don't sell to sponsorships. They are a part of your financial strategy and to do your business development. They are there to make connections, strengthen the application of the products and services you are developing or may already have, so that way they can go to your sales team through Canada Export, for example. And also to never work with someone that guarantees a grant. I've seen some copyright out there. I've seen it on LinkedIn where people will say things like, we can guarantee, the most recent one I saw was, we can guarantee 6 figures in 6 months. It's just not true because it's not their money to guarantee. The grants consultant can only be set up for as much success as they collaboratively work with your team to do so. Because at the end of the day, those grants are going to be assessed based on the grant application requirements, not based on your grants consultant guaranteeing you that money. Next slide, please. So how do I ask for help? You can head to our website and you can fill out our intake form. Anyone that mentions that they're from Employment Hero today will be getting a consultation with us. And then what we can do is we can assess that together. And I can hear your project, we can hear about what you're doing, and we can do a preliminary understanding of what might be the best fit for you right now. It might be, yes, you're eligible for grants right now. Let's start applying to them as soon as we can. Or it might be, there's a couple of gaps here that still need to be addressed, and that strategically we should start applying to them in Q1 or Q2. Happy to have that conversation with anyone that's interested to know when they should start asking for help. And from a perspective for us, we only work on minimum $1 million pipelines. So when we work with companies, we create that strategy, that funding strategy in complement with your SR&ED, with your tax credits, with other capital stack that you have involved. And that anyone that is a client of Employment Hero also receives an additional 10% off all their services with us. Next slide, please. And that's it. There's a QR code that links you to our website as well as my name, and I can pop my email address into the chat as well. So thank you.
Thanks, Chelsea. If you can go to the next slide, Natalie, that'd be great. So Chelsea's done a great job of preparing you for success, basically, when you're going to be applying for your grants. I wanted to touch on two things that Chelsea mentioned before I go into my section. One is just ensuring that you have capacity to apply for grants. I've had clients over the years where they'll literally apply to almost every single grant they learn of, and it takes a considerable amount of time. And the other problem is, outside of the time aspect, is keeping consistency in your narrative amongst the different grants. It never results in anything good. So I always tell people, I'm like, hey, look at the grants that are most likely your highest likelihood of success and just focus on those. And those are usually the ones where you get larger dollars anyways. The other thing I really quickly want to touch on from a funding strategy, like I mentioned at the outset, we've worked with hundreds of companies at my firm, and grants and SR&ED are a critical component of just ensuring and managing cash flow. And one of the things that a lot of people don't know, it's less so with grants, but definitely on the SR&ED side, is you can finance your SR&ED. I don't recommend it unless you really need it to bridge 3 or 4 months. Some people do utilize it as a strategy where they finance a SR&ED each year to, you know, account for seasonality in their business, but it is a powerful tool when used right. Don't use it as a last resort, but when used effectively and planned into your cash flow planning, it's something people should take into consideration. So from a financial reporting perspective, the thing to remember with most grants is that you're being reimbursed for expenses you already incurred after you'd incurred it. So obviously the reporting component is extremely important, and that's where a lot of companies struggle the most. So they'll apply for this grant, and then they'll say, okay, great, I have these 3 grants that I need to submit my eligible expenses for either monthly or quarterly. Now what? How do I do it? How do I pull everything together? It becomes a massive project. So what I tell people is start with just understanding for your grant what the eligible expenses are. Like Sarah had mentioned earlier on, like labor is usually the largest one. Consulting expenses pretty close to there. For both labor and consulting, just be aware of what jurisdictions individuals need to be in order to maximize your claim. So as Sarah mentioned, usually they need to be Canadian residents, but some grants I've seen will cover a smaller percentage of foreign residents. Not common, but it's something to be aware of, and it's something that's usually laid out within your grant application. On the expenses not normally covered, the only one I really want to highlight, and capital assets in certain cases now can be with the new SR&ED updates, but the one I really want to highlight here is expenses incurred before approval. I've actually seen this come back to bite some people in the butt in a few cases where they think they're going to get a grant approval and they start ramping up expenses for against a project anticipating that approval, but that approval might take a week, 2 weeks, 3 weeks longer than anticipated to come through. And those expenses incurred during that ramp up period may not be eligible if they're incurred prior to the actual approval date. Now, it's always important just to have discussions with your lead, your account manager at the government to see if you can get them in, but it's something to take into your planning and consideration. Next slide, please, Natalie. So financial readiness for for your grant reporting, you need to have an accounting system and you need to have a mechanism in order to take all of your eligible expenses and submit them to the government through whichever portal they have. And a lot of times I'll see people say, okay, well, I've got my grant. I'll pull together everything at the last minute. And what happens then is, as they're pulling everything at the last minute, they will either miss things or they have trouble grabbing all of the supportable information they need, and they delay their grant submission, which just delays their cash flow, right? And depending on how tight of a budget you're running with on that in that capacity, it could have pretty negative consequences. For tracking expenses, Natalie, if you can go to the next slide, please. For tracking expenses, what I normally recommend is first and foremost, have an accounting system. I know it sounds basic, but a lot of companies don't have an accounting system to start off, at least at the early stages. I normally see companies use either QuickBooks Online or Xero as their system of choice, just because they're pretty robust. They have a pretty big app ecosystem, and they're relatively easy to use. If you're utilizing an accounting system, let's assume it's either Xero or QBO, the easiest way to track your eligible expenses for each grant is to create project codes or classes within your accounting system. So if you, let's say you have 3 grants, you have IRAP, you have Can Export, and a training grant. The easiest thing is, as you have eligible expenses, tag it with a distinct project or class for each one of the grants. And then at the end of each quarter, you can pull together your income statement for each one of the grants. So now you can know what you need to submit. The second thing I'll mention there is invoices and receipts. If you do not have well-established accounts payable and financial processes, gathering invoices and receipts can be really, really cumbersome because you're going through emails trying to find things, or reaching out to vendors saying, hey, can you give me another copy of this? If you already have your eligible expense within your accounting system, you can usually just drag and attach your invoice or receipt to that expense in the accounting system. So it's there. All you have to do is, when you pull your income statement, then is double click into the invoice or receipt, download it, and you can upload that into the reporting portal. A lot of grants will ask you for your actual backup, or they'll use a materiality threshold. And if they don't, they could come back on a test basis. So you want to make sure you can easily gather that information. Next slide, please, Natalie. So as we've mentioned a couple of times, allocating labor is usually the largest component of any of the grants. And you need a way to ensure that you can allocate labor costs. Ali had mentioned, like, the preferred method of allocating labor costs is time tracking. It's the most defensible approach. Employment Hero Systems does it. It's something where if an auditor came back and said, hey, why did you allocate 15% of so-and-so's time to this? You can say, oh, well, look at his timesheet right here. Now, the problem is, a lot of people don't like doing time tracking, timesheets. Like I said, I think the majority of startups I go into, a lot of developers detest doing timesheets, but you get them there. Like, it takes a while, right? For smaller companies that are earlier stage, that maybe don't have the processes in place to get everybody on time tracking, which is the preferred approach by far. They usually use some sort of percentage allocation where they say, hey, person A spent 15% of their time on this project, 20% of their time on this project. It's hard to defend that. Like, I had a company years ago that got audited, and the only way they could defend it is by actually going through their JIRA tickets, which took an inordinate amount of time. And it would have been significantly easier if they had had the time tracking up front, and it obviously implemented time tracking the year after, just to make it easier. So whatever your method is, just make sure, it's defensible, and you have rationale around why you're actually allocating costs, your labor costs, in the manner you are. Next slide. Grant stacking. So we've mentioned stacking a few times. Chelsea made the good point that your grant agreement will tell you how much you can stack and if a project is stackable. So commonly, and just for people that don't know how stacking works, usually is you can take an eligible expense and apply it against a number of grants up to a maximum. So that maximum usually is somewhere between 75% to 100. So the one I see very commonly, at least in tech, is you have IRAP. IRAP may cover, let's say, 65% of a person's salary. So they say, okay, well, I'm putting 65% of this individual's salary towards IRAP, and the remaining 35% I'm putting towards SR&ED. It's important to understand which funding sources allow you to maximize your stacking. So some sources will reimburse you for a greater percentage than others. So once you know that, it's more of a spreadsheet exercise. And unfortunately, there isn't an easier way to do it. So the way we normally manage stacking is we just have an Excel spreadsheet and say, okay, well, here's some of the eligible expenses on the left-hand side, and across the top, we have the different programs and how much we're applying against each program. The key thing here is just to ensure that you're not double dipping and you're only going up to that max, because admittedly, years ago, we used to be like, there's no way this grant talks to SR&ED or this grant talks to that grant. There is a lot of kind of information sharing a request, so I would recommend making sure you keep good documentation and ensure you're only hitting up to the max, and definitely don't go over 100% on to avoid double dipping there. That's it from my end. If you guys have any questions, feel free to reach out. My email is there, and there's a link to our website on the screen.
Awesome. Thank you, Mandeep. Everybody, please reach out to Chelsea and Mandeep. We'll send out their emails as well following this if you didn't have a chance to capture it. But as I'm sure you can tell through this session, a wealth of knowledge and so many different things to be considerate of as you start to explore these different options. And so with that being said, we have a bit more time left in today's session. If you have questions, please drop them in the Q&A chat. It is at the bottom bar on Tool or on Zoom. Oh my goodness, I cannot speak today. Drop those questions in. We'll try and get through as many as possible. But if we don't get to yours, we will also be connecting via email. So feel free to reach out then as well. So I will just start with maybe moderating some of these questions. We'll throw them out if we don't have an answer for some of them. We promise we will follow up with you post-session. So the first one, maybe I'll pass it over, I guess it could be a mix, is what are some examples of R&D facilities? So I'm guessing that this one has to do with the SR&ED capital expenditures. So Ali, I know I have an idea, but I'll let you jump in.
Yeah, true. So if that's not the case, just let us know. But I think it's because of the wording for the capital cost, then that can be included. In terms of, I think the wording can be confusing. The capital costs do not necessarily need to be invested into R&D facilities. What R&D facility means is the place that you are performing your research and development within. And the type of capital cost that we're looking at is essentially you make an investment into a physical item or something that would become part of your company's capital, but is essential for you to perform the SR&ED eligible activities or activities that are going to be claimed within your projects that you're going to be submitting. In that case, historically, you wouldn't be able to claim them since 2014 or so, but the CRA has made a change for the upcoming year, and now you can include capital costs. So let's say, as an example, you're developing a robotics kind of a project, you're creating a robot, and for it, you need to purchase a robotic arm. Which essentially is going to, or the whole robotic structure. It becomes part of your company capital because later on you're planning to sell it. However, that's the object or the structure that you're going to be performing R&D on. So as a result, you can claim the money that you're investing into that as part of your SR&ED eligible project. Another example, I can see there's another question that goes in line with what I'm going to say, but data center compute costs on their own, they do not count as SR&ED eligible expenditures because you're just essentially renting, right? So you're paying server costs, etc. However, if you were to purchase the physical hardware equipment that you require to run servers on your own, and that's installed within your facility, then that becomes part of your company capital, and now you can include it. So hope that was helpful.
Thank you, Ali. And yeah, anybody in the chat asking questions, if you want to clarify anything further, feel free to pop it in the chat and we'll pay attention to that as well. Chelsea, question for you. Can a company apply for IRAP more than once?
The short answer is yes. The long answer always has a but. So yes, but if you've already applied and you've successfully received IRAP, if you are asking if you can apply again, You can apply again as long as the project that you already have open with IRAP has been closed. All of the active parts of that project need to be officially closed with a final claim and report, and then you can apply again. If you're looking at an IRAP stream and you're thinking, I want to apply for another project, so you want to have two simultaneous projects, you would have to talk with your IRAP advisor. So the way that IRAP can work usually is when you apply, you are assigned an advisor, and that is your main point of contact within IRAP. And if you have anything that's like a project specific question or I want to add an additional project, I would always recommend asking IRAP first if that's allowed.
Perfect. And then Mandy, question for you. For those that are interested in working with you and your team in a fractional CFO, what is kind of the flow of how you typically take on clients? What does that look like? And maybe how much work to kind of get started working with your team?
Initially, it's a consultation call up front just to better understand the business to make sure there's a fit. And once we assess whether or not there is a fit there, we'll go through scope and how we may be able to help. I mean, quite candidly, it's a lot of times people reach out and say, hey, can we get help on a fractional CFO perspective? And we'll talk to them and say, you actually don't need a fractional CFO. Maybe you just need a bookkeeper, or maybe there's just a slight adjustment you need to make here in your current processes. We're just kind of there to add value, and we want to make sure that companies are put their best foot forward. So starting point really is just reaching out and jumping that ball.
Awesome. And just for those in the chat as well, or I guess in the webinar, so in terms of your services that your team supports with, you do now also is that, are producing products, your team can support them with that?
Sorry, there you paused there for a second, or I
Oh,
paused there.
did I cut out? Okay, I was just asking. So in terms of your services that you support customers with in the space, you now recently launched a go-to-market function as
Yeah,
well. I understand. Okay. Can you
yeah,
share?
yeah, because we've been doing we've been doing this for 12 years, and we started up as fractional CFOs and trying to hit the common pain points that we normally see tech companies experience as they're scaling. So start off with CFO, then added bookkeeping. In that capacity, as companies are scaling, especially during 2022, 2023, when there was a lot of new capital coming into the marketplace, we said, there needs to be an HR function to our team as well to support companies in their growth and ensuring they have the proper policies and procedures in place. And more recently, what we see is a lot of companies going out there and developing a product and not necessarily having the right product market fit, or even outside of that, having a great product, but not having the right revenue motions that's repeatable and getting past founder-led sales into a more repeatable sales team orientation. So launched a service around that earlier this year.
Awesome. Yeah, that's huge news. And then I will get through two more questions because I know we are at time. Again, we'll send out everybody's contact information. So if you are curious to chat with anybody more specifically to your case, feel free. But a question for Ali. So talking about eligibility for shred costs, can you still claim labor and material costs on the work that is sold to a customer? Or asked another way, can something both be R&D and a sale?
Yeah, good question. So definitely yes. I mean, the whole point of the SR&ED program, as I mentioned, like when it gets to experimental development, you're either developing a product that you're planning to sell for your company or improving an existing product that is already in the market. So in terms of your intellectual property being sold to customers and someone else paying for it, by all means you can claim the work that was done on it. However, if we reposition the question in a way that sounds like the work is being funded by another entity, then it gets a little bit more complicated. So as an example, let's say you're developing a product that another company has stakes in and they invest into the work that is being done, then we need to look at it in a bit more detail and the agreement that you sign with the other company that is investing into the product that is selling, and whether or not either entity owns the right to claim shred on it. So it gets a little bit more complex, and that's when the help of a consultant is definitely needed.
Perfect. Thank you. And I did see another question come in specifically around the grant piece, how Chelsea and her team typically operate. We will send out that intake form. So if you weren't able to find it on the website, Chelsea and I will send that out to everybody. If you are an Employment Hero customer already, you can get 10% off those services. So just let Chelsea know if you reach out to her. And then on the shred side, because I think there were two parts to this question that came through. For Employment Hero, we do offer end-to-end on the shred piece. For any grants or non-dilutive funding outside of shred, that's where we engage Chelsea, our grant partner, on that side. All right. Well, thank you everybody for joining today's session. Please reach out to the panelists if you have any questions. I know they're genuinely great people. They'll be happy to connect with you all and learn about your journeys. We do have another session coming up in January talking about some of the changes to 2026 Shred and how you can start to strategize around that. But thank you all and have a good rest of your day.
Thanks for having us. Take care, everyone.
Thank you.